Hey everybody, welcome back to the channel. We are back on another episode of the Daily Recap, and we've got a bunch of things to discuss today. You've got the first insider buy on Tesla since November 2020. Did not expect to see that after hours, but we got that piece of news. So we'll be talking about that. Tariff updates. Scott Bessent and Howard Lutnick will be talking tomorrow to the media. Bessent in a press briefing, Lutnick on CNBC. Bessent did talk to CNBC this morning, and he had some interesting things to say that I think got the market kind of excited. So we'll be talking about that, the implications of that. And then finally, we've got a massive week with earnings coming up. I want to do a bit of an earnings preview in terms of what I'm expecting from some of the companies that are reporting: SOFI, Robinhood, PayPal, Grab, Meta, Amazon, Microsoft, Apple. Lot to talk about. Lot to get into. We got some other headlines. Let's get into it. Before we get on with the daily recap, real quick, thank you to everyone who showed out to the Toronto meetup. It was an incredible time. Just got back yesterday morning on Sunday, and it was one of the most incredible experiences of my life. Every time we do these meetups, I am humbled to see all the support. That is a picture right there on the screen of everyone who showed up. I think at one point we had 170 people that showed up to the meetup, and yeah, it really means a lot for people to show up, take the time out of their busy lives and come to show their appreciation and say hi and network with all the other people that were there. So thank you to everybody who showed up to the Toronto meetup. Houston, Texas is next, likely end of May. I'll be giving more details soon, but if you're in that Houston, Texas area, Texas will be next. So shout out to Toronto, T.Crody. It's a bad man ting, you know what I mean? I love T.Dot. I love Toronto. By the way, the women are beautiful in that city. It's absolutely incredible. All right, let's get on with the daily recap. Okay, so let's start off with what Bessent said today, because as soon as I woke up, I saw that he was live and he was saying a bunch of things that the media wanted to hear. Good things about trade deals and negotiations and all that stuff. So let's get into what exactly did Scott Bessent say. First thing he said was, hey, we have a complicated relationship with China, but I am confident that we will be able to get to a deal with China. Now, Bessent, Lutnick, Trump, they've all been saying this for the past couple of weeks now. We've had the 145% tariffs, then we're going back on 145% tariffs. We'll talk more about China and implications around shipping and some of their price increases as well in a bit. But he continued to try to get the market to believe that eventually China will have to come to the table. And he really highlighted in the interview the propensity to consume for America, aka the US consumer, and how China needs that. And there's no way that China's not going to come to the table. So I don't know if they're talking yet. Trump said they're talking. Xi said they're not talking. I mean, I would assume at some level, China and the United States are having discussions. Is it complex negotiations yet? I don't think so. And Bessent is trying to get people to realize that, hey, it's going to happen, but it's not happening yet. He said about Europeans that the EU is panicked about the strength of the euro and that they will likely be cutting rates. They've already cut rates 7 times in a row to continuously make sure that the euro is not as strong as the dollar, because that gives European countries different benefits in regards to, trade more meaningfully if there's a better chance for the euro to be a little bit stronger than the dollar, or for any country's currency to be stronger than the dollar. That's why China engages in all this artificial manipulation of their yuan currency. So interesting that he says that, because his argument is actually, hey, we have a lot more leverage here because the dollar keeps selling off based on all the tariff and trade volatility. We think that's not going to be good for the Europeans, and they don't want the euro to be as strong as the dollar for the trade deficits that they have. So more likely than not, he thinks that Europe will not only be cutting rates, but they'll be coming to the table and get a better chance at having a deal. Right now, the EU, we have no deal with them, and that 90-day pause, I think we got about a month and a half of that left until that pause goes away, which we could pause again indefinitely. But the point is, like, we need a deal with the EU and China. Right now, we don't have it. Bessent says we're likely to get it. And then he said, many of the 17 important trading partners have made very good proposals to avert U.S. tariffs. This is Vietnam, Thailand, etc. And then he says all aspects of governments are in contact with China. It's up to China to de-escalate on tariffs. Finally, what he said is that India might be one of the first trade deals we sign, and the first trade deal might come as early as this week or next week. That got the markets really excited. We started to see at basically 9:30 to 9:40 Eastern when the market opened, a nice gap up. Tesla was almost at 300. Palantir was up. Nvidia, it was more up than it was before. Nvidia was red on the day, and then it went really red, and then it recovered a little bit. But at least Nvidia wasn't as red when the markets opened. S&P was up almost 0.5%. So you saw the markets really kind of rally off the headline like they have been doing for the past couple of weeks now, which is, hey, if the only thing stopping this bull market is getting some deals done, then we need to get some deals done. And India being confirmation by Bessent as like one of the most likely trade partners announced this week or the next week to me is bullish, and hopefully that's going to be something that we get pretty soon. Now, one thing that I think is oddly peculiar is Lutnick, who you guys keep spamming Nutlick in the chat, so it's really hard for me to say Lutnick because every time I think of saying Nutlick. But Lutnick is going on CNBC tomorrow at 2 p.m. He has not been on TV in 2 weeks. So the fact that he's coming back on TV to me is kind of bullish because Bessent speaking at 8:30 and doing an official press briefing. I think the reason they want Lutnick out there, and they've kind of artificially kept him away from the media for reasons that probably are accurate in terms of him not being able to effectively communicate. But if Bessent's going to set up something in the morning, Lutnick's probably going to double down on what Bessent says in the afternoon, which means the question is, what is Bessent going to say? And if Lutnick is not there at 2 p.m. on CNBC to just like talk whatever he usually talks about, if he's actually there to double down on what Bessent is saying, I think that means Bessent might be saying something good at 8:30. This is the nature of analyzing the markets, bro. We're trying to figure out every little detail about like what is going to be said, where it's going to be said, how it's going to be said, who's going to be saying it. I would hope tomorrow that Bessent says something good and Lutnick just doubles down on it later throughout the day. He'll be live at 8:30. I'll be live at probably like 6:45 tomorrow, 6:50, because we got SOFI earnings and their results come out at 7. So it'll be an early day for me, but we're going to be streaming a lot throughout the day to get through all the earnings. But yes, Bessent, Lutnick talking tomorrow. Looks like we got some trade deal progression starting to be more exciting to the market in terms of actually solidifying deals. My takeaway is very simple. They can talk about deals all they want until we get some real deals. The market's going to be on tilt. So we got to get the deals, and hopefully they're announced soon. Okay, next big update on the day is Tessie. Now, this I did not expect after hours. The first buy since November 2020 on Tessie. Take a look at that, dude. Joseph Gebbia. He joined the board of directors in 2022. He bought 4,000 shares a week ago at $256.31, so about $1 million purchase. And it is the first insider buy since 2020. I think a lot of people were caught off guard by this because Tesla insiders usually tend to sell, not buy. Number two, Tesla earnings were really bad. And as bullish as I am on the future of Tesla, these earnings were not good. And the reason it pumped 10% on Friday was because of a autonomous vehicle regulation that went down, or it looked likely that it was being taken away, which is going to clear the path for Tesla to start rolling out autonomous vehicles. But still, dude, even after the robotaxi launch in June, we are a long ways away from robotaxis getting to, for example, 250,000 paid rides a week like Waymo is doing from Alphabet. Alphabet got zero respect for their earnings. The stock was down today and was barely up on Friday when Tesla was up 10%. Tesla ran up 10% just based on the headline. Now, that's not anything new. Tesla runs on headlines and narratives. Google, is not being seen as an AI play, I guess, by the market, even though Costco's entire net income is accomplished by Google in 20 days of the year. So what Costco does in 365 days, Google does in 20 days in net income. Steve and I talked about that yesterday on our podcast. I'll link it in the description when we went deeper on Google's earnings. But I mean, it's pretty damn incredible. So the fact that the insider actually chose to buy, I think is kind of bullish, right? Like if he's buying at 256, he obviously thinks there's going to be upside. People sell for a ton of reasons, but if you're buying, you are buying for one reason. That stock should be higher than when you bought it at. And, right now it's at like 280, 250, that $30 difference is whatever. I'm assuming he's buying it because he thinks it's going to be worth a lot more than 280 one day. And he probably didn't want to wait for it to go all the way down to 150 or something that people were calling for. Now, what's interesting about this is as good of a update is it is on the fact that we finally got an insider buy in over 5 years. Joseph Gebbia is worth $8 billion. He was the co-founder of Airbnb. So the dude's worth a ton of money. $1 million for someone who's worth $8 billion. I mean, it's not really like, it's not like he's betting the farm on Tesla. The point is he's not being super bullish in terms of the amount he's buying, which is a way to nitpick against why it doesn't matter too much. But at the end of the day, my take is that this is bullish. I don't know what happens with Tesla stock, or if it goes up or down from here, but I do think the first insider buy since 2020 is probably a good thing. Now, another thing about Tesla is the Model 3 in the United States is now giving you a 0% APR. Tesla's offering that 0% APR with a 10% discount. That to me reeks of desperation. The fact that they're giving you a 10% discount just to buy Model 3 and then they're taking away the APR from it. So they're giving you a 0% APR. I got my Model Y with 0% APR back in November. Means that their margins continue to suck and the argument around brand image continues to grow in terms of people that need to be incentivized to buy Teslas. I was speaking to a bunch of people in Toronto over the weekend about Tesla. And one guy told me that he had 3 Teslas on order. And then he saw a tweet by Elon saying Canada is not a real country, and he canceled it. Canadians have pride. And so when Trump talks about this whole 51st state stuff, it's like, now that I got to talk to some Canadians in person, some of them like it and they joke around with it and they think it's funny, but the majority of them are like, dude, what are you saying? Like, what are you doing? You're not going to invade Canada. You're not going to take away our sovereignty. And so I got to experience what brand damage felt like firsthand over the weekend. Another thing I got to experience is that one of the friends who I was staying with owns a Cybertruck. We were the only Cybertruck in Toronto, and we drove a lot. I mean, I'm sure there's more Cybertrucks in Toronto, but I didn't see any of them. It felt like we were the only one. Everyone was staring at us. We got a bunch of middle fingers. One guy even acted it as if he was spitting at us because of the resentment they had against the car. In New Jersey, I see like 5 Cybertrucks every other day, right? So like I didn't really see a ton of Cybertrucks in Toronto, and I could tell there was a bit of more negative resentment against the car. Does that mean the brand is completely ruined? Obviously not. But it does mean these are things we have to think about in the context of Tesla. And I think when it comes to the overarching story about brand damage, there is an argument. FSD and robotics to me outweighs that argument, and the stock is acting like FSD and robotics meaningfully outweigh that argument. And Joseph Gebbia, buying 4,000 shares, also probably thinks that the stock is worth a lot more than what the brand damage might imply that it should be worth. Next quick update is MicroStrategy. Saylor bought some more Bitcoin. He bought 15,355 Bitcoin for approximately $1.42 billion, 92,737 a coin. And the company now has a 13.7% year-to-date yield on their Bitcoin. Their Bitcoin yield is kind of the core metric that they focus on. 68,000.4 is their average, and they bought about 37.9 billion worth of Bitcoin. Why am I bringing this up? Well, Bitcoin held up pretty nicely today. I mean, BTC got to almost 90. Actually, no, it did get to, no, almost 95,910. Almost got to 96. I mean, right now it's at 94 and 92. It's really been holding up nicely. I don't think anyone can deny the fact that Bitcoin has just been incredible in terms of its momentum. ETF inflows were also pretty amazing. We've talked a lot about ETF inflows and how they've kind of died down over the past couple of weeks. Well, last Friday, actually, let's do last week. Monday, you had 387 million of inflows. Tuesday, you had 936 million. Wednesday, you had 917 million. Those are 2 back-to-back almost billion-dollar days of ETF inflows. Thursday, you had 442 million. And then Friday, you had $380 million of inflows from the Bitcoin ETFs going into the asset. Looks like people are starting to be bullish on Bitcoin. Okay, next update right here is on auto tariffs. So we got this breaking news after hours, not confirmed, but it is from the Wall Street Journal. And the reason I think the argument here is probably likely to happen is because Trump is going to be speaking in Michigan on Wednesday to commemorate his 100 days of being in office. Michigan is a state that voted for Trump, and it is the largest auto manufacturing state in the country. Here's what the Wall Street Journal had to say. Trump is expected to lower auto tariffs so they don't pile up with tariffs on products like steel or aluminum, which are already tariffed used to make cars. If companies paid a 25% tariff from other countries this month on cars, they can get some of that money back. And for car parts from other countries, there's a 25% tariff starting May 3rd. If a company makes cars in the US, they can get that money back, like 3.75% of that car's price in the first year, then 2.75% the next year. And after that, no more refunds. Essentially, the Wall Street Journal is saying, hey, he's going to unveil a bunch of different updates on auto tariffs. Again, not confirmed yet, but he is planning to unveil them in Michigan. And if he does, he's going to be walking back some of the aggressive tone that the administration has had on auto tariffs, which still are 25% on Canada and Mexico. That has not died down. The Financial Times reported that he would be dialing that back. So far, that's not been the case. And as a result, GM, Ford, Tesla, etc., have all been affected by those tariffs. What's my take on this? My take on this is very similar to what I've been saying for the past couple of weeks in the context of tariffs and negotiations. I think this administration is not actually serious about imposing tariffs across the world. And I know as I say that, it's a little weird because Trump said over the weekend that he wants to eliminate taxes for people that make $200,000 or less. And the only way to do that is to get the money from somewhere else, aka the external revenue service versus the internal revenue service. So theoretically, he has to get the money from a different place if he's not getting the money from people who make less than $200,000, which means they should be pretty serious about tariffs, right? Because like you got to get the money from somewhere. But I continue to believe that we've seen Trump fold a variety of times in regards to tariffs. I think the 10% universal tariff that's hit across the board for all these countries is going to come down to like 5% or maybe 0%. I think there's a world to get the India deal, the South Korea deal, the Japan deal, the Thailand deal, the Vietnam deal over the finish line they are going to try to get really good concessions, which they should try to get, and take those 10% tariffs down to 0, which would be great for the economy in terms of the earnings expectations, because tariffs are a way to decrease demand. Not the best for inflation, but then again, inflation's already coming down. And so that could be the way that Trump kind of saves all these deals. Stock market would love it, because the tariff volatility would pretty much die down if we don't have a trade war with every single country on the planet. And the market, I think, would be pretty happy about that. So I think even if this is just a reported reduction in auto tariffs and we have to wait for the actual updates, the trend with Trump with these whole tariffs, as we've been seeing the saga play out, is go aggressive and then walk back. I think if they needed to go aggressive to get the negotiating leverage, hopefully that leverage meaningfully results in different trade deals. But I really do think they're going to be walked back. I don't think 4 years from now we have 10% universal tariffs across every country in the world, which brings our average tariff rate up to like 23%. I think it's going to go down because we need to get deals done. And that's one of the easiest ways to get something over the finish line. Just say, okay, I'll take the tariffs to 0. By the way, Japanese prime minister today on the trade deals literally said, we want our number one priority for the U.S. trade deal, or for the new negotiated trade deal, to be for U.S. tariffs to go to 0. So when Japan says stuff like that, I would imagine Bessent's like, all right, we kind of don't need to get these tariffs from Japan, but they can do a lot more from us. And if all they want is to take the tariff rate to 0 for us to get these deals, let's do it. It's just a question of if Trump is going to deploy that strategy and meaningfully architect deals that don't have massive tariffs. We'll find out, but another auto update. I think we're going to get a lot more updates in the context of tariffs going away for more countries, hopefully soon. All right, let's talk about Nvidia. So Nvidia took a little bit of a beating today, worse than the rest of the market, recovered a little bit towards the end of the day, but still got beat, was down about 2%. At one point, it was down almost 4% on the day. What happened with Nvidia after that massive day we had on Friday? So first of all, on Friday, I think it pumped because the macro pumped. I don't think it was like an Nvidia specific pump. So, I mean, it was nice to see that momentum, but I don't think it was really related to Nvidia. By the way, I finished my Nvidia position, 1,000 shares, 60 shares. I bought at 107 last week. So I think it was like 107.80. So we're in 1,000 shares at 119. I have no problem with buying more, but that kind of core position that I wanted is now set in stone. The reason it was down today is because of a headline around China. So it's the same thing we talked about last week. Essentially, Huawei, which is a massive Chinese tech company, is starting to make a little bit more progress in the context of what they're doing when it comes to chips. And so one of the reasons why Nvidia was down is because now Huawei is getting ready to test its new powerful AI chip, which is the Ascend 910D, aiming to rival Nvidia's products per Wall Street Journal. Still early days, but it's another sign in the chips industry is pushing ahead despite U.S. export restrictions. I don't think this is anything we have to be scared about as Nvidia shareholders, particularly because of the fact that they're nowhere near Blackwell. They're nowhere near Rubin. They're nowhere near the next generation models that NVIDIA is going to be coming up with. So the idea that Huawei will overtake NVIDIA's capacity to build the most important technology in the world, to me, is likely not going to happen. Now, one thing that is important right here, though, is that the export controls means that NVIDIA can't sell their chips into China. And as a result, that means NVIDIA is not going to get that money. They're not going to get those profits. So I think the AI revolution has to be big enough, and CapEx demand and spend has to be big enough in order to architect the ability for NVIDIA to make up that demand from other places, which, as a shareholder of NVIDIA, I believe is true. And in fact, it's not just me. Google CEO Eric Schmidt today said this when he was testifying before Congress. He said, I honestly believe the AI revolution is underhyped. These algorithms will require more computation and energy than we've ever needed before. When someone like Eric Schmidt, former CEO of Google, says something like this, it means that Google's reaffirming their CapEx spend of $75 billion last week made sense. Meta's probably going to do the same along with Microsoft and Amazon later this week. But if these companies are going to keep spending on CapEx, NVIDIA's going to keep having demand. They're definitely going to have the hyperscalers continue to want the latest and greatest chips. If NVIDIA is down 2% because of a China headline about Huawei catching up, I don't think Huawei is anywhere near the most advanced generation chips from NVIDIA. Granted, they're being forced to innovate now because of the export controls, which is not really good for NVIDIA, not really good for the overall national security debate around AI, but it is good for Huawei. The question is, do you believe NVIDIA is just going to be better than them over the long term? I think the answer is yes. And if the answer to that is yes, then I think NVIDIA ultimately will do well. I think it's a dip that people will continue to buy. And the fact that Mag 7, at least with Google, have had such amazing earnings so far, we're going to get the rest of the earnings later this week. If NVIDIA can just follow that up with a good earnings, I think the stock gets closer back to that 120, 125 range, especially if the market sentiment shifts and we get more trade deals. So that was the reason why NVIDIA was down, but I don't think that's the reason NVIDIA is going to stay down. going into the next couple months. Okay, last thing we're going to talk about is earnings expectations going into this week. We have a big earnings week coming up. It should be a very, very fun week. We have a lot of companies that are going to be reporting on their earnings. And just to give you guys a look of how intense this earnings is going to be. Today, you had Domino's and Waste Management, which did okay. I mean, Waste Management missed, Domino's beat, but those stocks relatively flat. But Tuesday, which is tomorrow, we got SOFI, PayPal in the morning, Spotify in the morning, Coca-Cola, Pfizer. Then after the close, we got Visa, Snapchat, Starbucks. By the way, I have a swing trade on Snapchat, 1,000 shares at 870. I think it can run up to 11 or 12. So I have a swing trade on that. Wednesday, we got Microsoft, Meta, Robinhood. That's a big one. Apple, Amazon on Thursday, Roblox, Lilly, McDonald's. It's going to be a big week. It's going to be a big week. My overall, without going into the nitty gritty of every single stock, I talked a little bit about that on the Sunday Future Show yesterday. Again, I'll link that in the description. But I think these companies are going to do really well. I think Robinhood's going to crush it. I think SoFi is going to crush it. I think Meta and Amazon are going to crush it. Do they have to deal with tariffs and volatility and ad budgets potentially coming down? Yes, but these is Q1 earnings. Q1 wasn't really affected by tariffs. I think Q1 is going to be amazing. The question is going to be, what does guidance look like? And if they're going to reaffirm the types of guidance they gave before, are they going to give a new type of guidance? Google never gives guidance, but Tesla kind of refused to give Q2 guidance this time. And that is what I'm scared about. So far, 78% of the companies that have reported have beat, and there was about a quarter of companies reporting. This week is going to really solidify if we're having a quarter where companies are beating. And then we're just going to have to be patient and wait until Q2. But what we've seen so far to me is very, very encouraging. I think we're going to keep getting more momentum. Will these stocks rise or fall on these earnings? One is going to have to find out, right? I think Robinhood can get back up to that 55, 57, 58 level. I don't know if it gets to 65 again, all-time highs, but it's already made a nice run from 30 to 50 over the past couple of weeks. So I can't be that angry as a shareholder if it drops back down to 45, 47. SoFi went from 7 to 13. I think from 9 to 13, getting back to $9 I thought was ridiculous. Do I think SoFi should get back to 20 or get closer to 18, 20? Yes, but it's up to Noto and his communication. PayPal said this was going to be a transition year for them versus a growth year. Can they reinstill their guidance to say that transaction processing volumes in terms of payments volumes are going to be higher? Hopefully. But these are the metrics I think we got to look at. Meta's got to do CapEx. Meta's got to say AI is real. Microsoft's got to say, hey, we're going to keep spending on CapEx. By the way, real quick on Microsoft, everyone's saying that Microsoft's not spending on CapEx anymore. That's not really true. Microsoft's just shifting their spend on CapEx. So you can see right here that although Microsoft is freezing some of their data center spend, about 1.5 gigawatts of it, they already have 5 gigawatts under binding contracts until 2028, which is enough for 2.5 million GPUs. Again, arguments that prove the AI revolution should be intact, even if there is a bit of a change in terms of how the market is thinking about the overarching landscape for the CapEx trade. So I think earnings is going to be okay. I don't think it'll be bad, but this week we're going to get a really good understanding of how companies are reporting. All right, that's it for me. Thank you, everybody, for listening and watching. Appreciate everyone joining the channel and being part of the show. We'll be back to the market open tomorrow. It's going to be a big open with a lot of different earnings. So for those that care about a lot of those companies, SoFi, Spotify, PayPal, etc., SoFi being the biggest, then we will be starting with that. Thank you, everybody, for listening and watching. I'll see you guys in the next one.